The tech giants just dropped their Q3 earnings, and Wall Street's reaction has left many scratching their heads, including this golden retriever over here. Microsoft beat expectations, yet fell 3%. Google surged 6%, and then there is the fascinating pattern emerging that could reshape your portfolio and your strategy for the coming months and weeks. For those of you short on time, here is what my experience tells me matters the most. The Magnificent Five reported a staggering $448 billion in combined revenue. But more importantly, they're collectively spending over $100 billion annually on AI infrastructure, mostly going to Nvidia. And that's a number that's about to dramatically impact their valuations. In the next few minutes, I'll break down what each Mag 5 company reported, what it means for you, and we'll round up with how to trade it for each stock. Winston, of course, helped sniff out all the research, so this is not financial advice, this is golden retriever advice, so do your own bleeding research. Speaking of research and strategic positioning, if you want to learn how we spot big stock breakouts before they happen, and learn to sell before stock collapses, well, I've got something really special for you. I've recorded a 30-minute masterclass that will teach you exactly that. And you can watch it for free. After this video, of course, you wouldn't want to miss the next couple of minutes, would you? Go to felixprehn.org/get-free and literally learn how we spot breakouts. And that's not something I made up. It's something I learned as a banker and trading for the last 10 plus years. And I've learned for people who've been trading a lot longer than I had, which is really where the wisdom comes in. So you might think it's too good to be true and you can't spot breakouts and so on. Well, watch it. And I think you'll be surprised. You never look at a stock chart quite the same way again. If you're a beginner or you've been already trading or investing for a while, works for investors as well as for beginners. Let's start with Microsoft. What's with the dip after earnings? They beat on revenue and on profits. The stock, however, dives 3% after hours. What the heck happened there? Well, despite beating expectations, and I really mean expectations, I mean revenue is up 16% year over year, profits up 10% year over year, cloud revenue up 22%, insane stuff. And the AI business is approaching a $10 billion annual run rate. They didn't have an AI business 2 years ago. So it's the fastest growing business in Microsoft's history ever. Microsoft Copilot adoption is remarkable. 70% of Fortune 500 companies are now using it. But there's some growing pains. And these growing pains are part of success. Cloud margins dropped because they're spending too much money on AI infrastructure, according to Wall Street. And they're basically saying, guys, we are at capacity. We can't take on as many clients as we'd like. And Wall Street then goes, well, let's sell it off. They didn't grow or are not going to grow in the future as much as we think. Wall Street is a short-term idiot. And if you look at, say, Amazon, right? We can touch upon that in a moment. When Amazon started the cloud business, Wall Street hated it. And they were not bringing in any money. Now they bring in, I think, $20 million a minute or something crazy like that, or every other minute. So it's become the most profitable part of the business. And entrepreneurs know you got to invest, you got to build the next thing. Wall Street is a bunch of nincompoop stock traders, and they don't understand businesses. So if you're a long-term investor, look at the business, don't look at the stock price. At the end of the video, I'll look at how we trade all of these. We look at the stock charts together. In short, the supply constraints around GPUs should ease by the second half of 2024, and therefore we should see some really nice growth going into 2025. All right, let's quickly jump into Meta then and look at the key financial metrics that I think are really, really important. Revenue, $40.5 billion, 15% up. Profits are like $6 a share, which is crazy. 3.3 daily active users. Oh yeah, nobody uses Facebook anymore. Okay, all right then. If you want to believe that, be my guest. Stock performance, 70% up this year. It's been a good call. There's a nice breakout. If you wanted to spot that breakout, well, watch my masterclass. Link is down below and you would have been able to spot that. But here is where the interesting story lies. Meta is no longer a dying company. Their AI chatbot has attracted 500 million monthly active users, which is unprecedented. Instagram took 3 years to reach that many users. what Meta AI did in just months. So what is it that Wall Street doesn't like about them? Well, they're burning through cash like, a golden retriever chews his way through tennis balls or carrots or cucumbers or anything edible for that matter. And Wall Street, once again, being the short-term muppet, is saying, oh, we don't want you to spend any money. We don't believe the investment will pay off. So let's have a look at how we make money out of it in just a moment. Now, talking about Amazon, again, massive spending into AWS initially worried Wall Street. Now Wall Street think it's the best part of Amazon and maybe they should get rid of the retail arm. Well, Wall Street really is a short-term freaking idiot. There is, however, a bit of a warning here. Jeff Bezos the Magnificent just sold another $3 billion of Amazon stock. Does that mean he thinks the company isn't worth anything? No, it's just not the case. It's just what people do. They want to buy a 4th yacht or a 9th helicopter or a 12th house. Or, those are real urgent requirements that billionaires have. Otherwise he gets left out sort of thing. But no, in all seriousness, because all these big tech companies buy their own shares back, even if he sells it, he probably still owns the same proportion of the company because the company keeps buying back shares and he's the biggest shareholder out there, one of the biggest shareholders out there. So I actually think Bezos selling is quite nice for us because it gives us a longer period of time to accumulate Amazon stock, which I think has tremendous growth opportunity in cloud, AI, try Anthropic, it's insane, and robotics, because they're really, really into that. They got more robots working for them than any other company in the world, I believe. Jumping over to do no evil Google, I was going to say do no good Google. Let's look at the numbers that really matter. Revenue up 15%. Operating margin improved by 4%. Cloud revenue up 35%. Search revenue up 12%. This is not a company that is dying, even though everyone's saying Google is dead. No one's going to search with Google. Well, what are you using? Bing? I mean, come on. Google shares actually jumped after earnings. Why? Well, the cloud business made 266 million profit last year. This year, they made 1.9 billion this quarter, I should say. This quarter, 1.9 billion. So it's a 7-fold increase, and that's kind of the sort of stuff that even, your most hungover trader on Wall Street might notice. And while they're not the sort of sexiest AI company out there, they're just integrating it with their massive search business and their massive advertising business, and they appear to be making it more profitable. So therefore, everybody's happy. They also got rid of 1% of people. Wall Street always loves that, right? They really are there. Wall Street really is pretty freaking evil, isn't it? They like it when you lay people off. You become more profitable with less people. You don't invest. It's a really weird world, isn't it? But in a nutshell, Google is proving that they will maintain their search leadership for quite some time and that they don't need to burn through crazy amounts of money to do so, and that they can actually improve their existing business quite easily with AI. Least but not last, Apple. Revenue up 6%. iPhone revenue up 5.5%. Service revenue up 12%. Cash, 156 billion. That's pretty impressive. Half of what Uncle Buffett has, but still quite impressive. Now, why do you think Buffett has sold significant parts of his Apple stake this year? I think he's worried about two things. One, the apparent lack of innovation at Apple. There is no, this is going to be the next big product out there. It's just incremental growth, incrementally higher margins, because more people use iPhones, therefore more people use Apple services, so it becomes more profitable. But it's becoming more your kind of steady dividend kind of type company rather than this thing is going to double. And I think market share loss potentially in China is definitely a thing to also watch out for. So for me, the silver lining with Apple is definitely the service business growing at 11.9%. Sounds pretty good, but it missed expectations. We were expecting it to grow at 13% plus. We, as in, Wall Street. And a small miss on big revenue does actually really matter. So for the next couple of quarters, watch out for how they are making money from AI, all these companies. Microsoft is very enterprise focused with Copilot. Meta is very kind of consumer engagement driven, and Google just wants to make its search better and its ad display business better, while Amazon just wants to integrate AI into the whole cloud business, their whole enterprise offering and everything. And Apple is sort of looking at a device level integration. So the market will continue to reward companies for efficient AI investment. They want to see bang for the buck invested. They don't want to see a tale of, we're going to invest $100 billion and in 3 years it'll be amazing. If you do that, the market's going to hate you. So you have to show that there is actually incremental revenue growth and high margins coming in. So overall, which one would I buy? I think they're all amazing businesses. The only one I'm actually genuinely worried about is Apple, because I just think there is a risk here of being displaced, not anytime soon, but I just think if somebody came out with a much, much better product, as in some real innovation, then I think these guys would be at risk, although they have a very, very loyal following, I must say, in fairness. I think Google's search threat is a little overstated, but there is definitely something to it, because if ChatGPT comes out with a better search, I mean, they already have in some ways, where I was sitting down with a friend of mine. We developed Trade Vision together, and I was like typing in some question, and I literally asked a question to search, and he looked at me and he said, you can't do that in Google. And I'm like, why not? Because I'm so used to using these AI LLMs, and you can't really ask a question to Google search because it doesn't really have that understanding of what it's all about. So that needs to change, and unless they change that quickly, they will get left behind, because people will just prefer to use the LLMs, especially once the LLMs are properly hooked up to the live internet. So I think that is a threat to them, but I also think that Google will catch up. They have pretty much unlimited resources. So I don't see big disruption there. I think the company I'm most excited about in terms of innovation is Amazon, just because they're really investing into robotics. And I think if I had to hitch my money to one wagon, it would be the Bill wagon, because Microsoft is just a beast in terms of selling. Not necessarily the best product, but nobody sells better than Amazon does, and they've got this insane penetration of, shouldn't use the word penetration in relation to Microsoft and Bill Gates, right? Make a note on that one. I just think that they are probably the most reliable out there. That's just my opinion. You obviously have to come into your own conclusions, but check it out. And stick around. I'll walk you through the charts, but do make sure you watch that free masterclass and really learn something. It's free, and it's going to change the way you look at charts forever. Thanks for tuning in. Right, chart time. Let's look at Nvidia here inside Trade Vision, which is a platform that we built to give you the same quality data that Wall Street has access to, and that's why we continue to make it immensely useful and practical and very affordable, which is really the goal. There's also a week's trial, so do check it out. Nvidia here is basically trading at these highs, right? June was 135, July was 135, these were slightly lower, and then here once again we're kind of at 135. So at the moment that seems to be a little bit the lid on the party. If you then click on the more advanced chart on the top right here, it opens it up in a new chart. In green, you've got our buy signals, and when they end, it ends, and we've actually bizarrely managed to beat buy and hold on Nvidia, which has been really hard, very, very hard to do, because the stock's gone up so much. You can also see the resistance in here and the support. Those are market makers selling at the resistance at 140 and buying at 131. Again, super useful data. But if I turn all of that off and just look into what's the trend here? Well, let's look into the future a little bit, and let's have a look at where does the market see Nvidia by the end of the year. So if I select that date up here, like January 2025, say, you see that blue zone there? That is the zone in which the stock market, Wall Street, predicts Nvidia will move. So they're basically saying we've got room to go up to 167, not much more. So Wall Street's really just pricing in sideways action. They don't believe that AI can accelerate. And I think they're once again asleep at the wheel. I think they're really missing out on something here. And we're not seeing any massive positioning above the market go higher and higher and higher. You're not seeing any positions there. So no one really on Wall Street side betting on the big breakout. You can also, if you wish, look in here what we call smart trades, which are basically dark pool trades, and type in, there was Tesla, type in here Nvidia, and then you can also see live every single day the trades that Wall Street it's up to. And I would look at the really big trades here, watch for the juicy ones, and they're going to tell you quite a lot about what the smartest money, or certainly the biggest money out there, is doing. And you see quite a lot of bearish sentiment here, right? Everything red is bearish. So the market at the moment quite cautious as I'm recording this. Next, let's have a look at Meta. And again, we've been very successful in calling buys here in green and exits in red, turning a 49% buy and hold into 175% gain with our AI indicator, of course, past performance, not, promise of future and so on. And right now, is letting out a little bit, right? 595 high there. Here's another one at basically the same point, 593. So 600 seems to be too much to stomach for the stock right now, and I'll tell you why. So if I just get rid of the trend here and look at the resistance, where does it sit? It sits at 600. The market makers, the bastards, they sell at $600. And they did it here and there and here again, so don't expect it to break over $600 anytime soon. But you can also thank them because they're also buying at 565, which is also what they've done here 4 times in the last week or so. So we're basically kind of stuck in this zone here, which isn't a bad place to be, but I would certainly call it kind of an exhaustion pattern rather than a big juicy rally. And if we look at Google next, again, just load the sort of simpler chart here. Google hasn't done a lot since the beginning of 2022. It's up literally like 4% or something like that. Well, we managed to at least squeeze 21% out of it with our little trade indicator there. So maybe check it out for a week's trial. It won't risk anything at all. And we called it a little rally here at 162. So far, that's a decent journey up. And I think it was probably quite a good call because we have, and let me just zoom in on this again. Basically, if you connect all of these highs here, you see, we did kind of break out just after the call here. And that's kind of an important thing. The next thing I would then look at, like how much volume was there, and click on the more advanced chart and go a little bit deeper into, was this a good call? But yeah, it looks like it. After earnings, massive volume, we kind of went up a lot. We've kind of come down a bit. That also tends to happen. You basically get a second chance to get in on most rallies almost every single time. So right now, this looks like an attempted breakout. The jury is still out whether or not we will break out properly. We basically want to just stay above here, this gap, which is literally where we're trading right now at about $170. Next here is Microsoft. Yeah, we even managed to beat Microsoft here on buy and hold 26%, trading 32%, which is decent. Not amazing, but decent. And what do you see here? It's sort of a zigzaggedy pattern, right? Not a lot going on there. One of the reasons is that recent high here at 440 also is the resistance. Market makers are selling at 440 basically, which means it's very, very hard for the stock to break out. If I get rid of all of these indicators and everything else, just look at the strength in that sell-off here. Pretty significant, right? But then again, let's put the support in here. We had support at 400. People actually bought at the bottom of the previous dip, and that's always a good place to be positioned at, just below that in terms of trading stops. So, bit of an exhaustion pattern. Is it a head and shoulder? Yes, it is actually. And that's not a great pattern to be in. Let me illustrate that here. Let me get a different color. So, left shoulder, head, right shoulder. And these points here are the armpits. And we connect them with that blue line here as we've done. I'm just going to draw it in again. You drop below it and you've completed the head and shoulder, which is typically a very bearish setup. Now, so you might think, okay, short the bloody thing then and, go really bearish. But because we know that market makers at $400 will buy and we only have $10 to drop, it's only 2.5 percentage points. It doesn't sound like a great trade from my point of view. So I would wait. I think it might be a false breakdown, and I think we might well recover here. But jury is still out on that one.
Amazon, another stock that hasn't done a great deal, only up about 5.5% since beginning of 2022. Trading, well, we did, 6 times that or something, 7 times that. So again, do check out Trade Vision here, and do of course use it. You still need risk management. You still need to understand what the heck you're doing. You can't just blindly trade an indicator, but it definitely helps a heck of a lot to get in on things. And we called it a buy here at 178. That's a pretty good call so far. We're $20 higher, which is pretty impressive. And now we're kind of struggling with that $200 resistance out there. And why does that become such a strong resistance? Because Bezos, the Great, feels like he should sell stock at $200. He doesn't think it should be going any higher. He might need, another boat or something. Maybe he fell out with his wife and needs another boat for the mistress, or I don't know what. They actually look very happy together. People sell for various reasons. Don't know what he's trying to do. Maybe he wants to invest in something else. Who knows? But anyway, that's kind of the kicker here. So would I buy it now at 196? No. I will buy it once it goes above 200 and Bezos is not selling. So I would just wait. Otherwise, it does look like a beautiful breakout actually, but we know the Bezos pattern, selling pattern, so therefore we should probably do absolutely bugger all about this. If you got some value out of this and you want to understand how to really read stock charts and spot the big, juicy, beautiful breakouts that we get from time to time that make us a lot of money, then watch the masterclass. It's free of charge. It takes you half an hour to watch it and learn. felixprehn.org/masterclass. And I promise you, you'll never look at a stock chart quite the same way again. All the best.
If you want to know the 8 best stocks to buy before or just after the election in this November, well, you found the right video. Did you know that in the last 4 presidential elections, certain stocks surged over 200% within 6 months of the election?